So your forecast for the April jobs report was 159,000, which was pretty much the consensus. What is the big picture story that you feel this jobs report is telling us about the economy right now?
Well, I think the big picture story is moderate economic growth, job gains across a number of different sectors, but all of those gains are still a little bit weaker than a traditional economic recovery. I think that's one side of the story. The other side of the story is the unemployment rate coming down, driven perhaps by the participation rate coming down, again reflecting some technical changes probably going on in the labor force. So I think you got moderate economic growth, job gains pretty broad-based, but still weak relative to what people had expected.
Okay, broad-based broad-based job growth, I should say. I was looking at the different industry trends. Manufacturing added jobs for a 7th month, but the household survey was especially weak. A loss of 169,000 jobs compared with a gain of almost 900,000 in January. What can we extrapolate from that?
Well, I think when you look at the household survey, you do get a sense that, and again, remember, that's the survey that really doesn't get revised, that the underlying tone of the job market is weak when you're looking at that unemployment rate, when you look at labor force participation, when you look at the labor force growth rate itself. It is disappointing because it suggests that the potential growth rate of the overall economy may be a little bit weaker or lower than many people had expected, and that lower potential GDP growth may reflect job opportunities in the future and may impact the Fed's expectation about their full unemployment rate.
Sounds like this report kind of confirms that weather contributed to the strength we saw earlier this year and that we are facing a second-half slowdown.
Yeah, the weather is not the big story, not the top 30,000-foot story, but it does impact the distribution of jobs across months, and it probably did have some impact there. We probably still have a residue from the seasonal adjustment problems dealing with the big downdraft in 2008 and 2009. But I think in the second half of the year, you would see some modest rebound in terms of job growth and the economy, but once again, just not to the strength that other people expected. We're going with 2.5% growth in the second half of the year. We think that's a fair estimate, but once again, not accelerating the economy to more of a strong 3% plus growth rate that some people had forecasted.
So then it looks like the Fed's cautious view on the economy is pretty well placed. What does Ben Bernanke and the rest of policymakers do now?
Well, I think from the Fed's point of view, they're going to stay put. They want to see another month of information. But I think when the Operation Twist program ends in June, I don't think they'll pursue that because from my personal point of view, interest rates are not the issue. The issue is what is the estimated by businesses final demand for their products. They don't see a strong demand out there. There's really not a reason to be hiring a lot of workers or buying a lot of new equipment. So I think you do have a sense that interest rates are not the issue. I think the Fed just stays put, does not renew Operation Twist.